Hello, everyone, and welcome back to the channel. Richard Hart, the Bitcoin bear case. I think Richard Hart is the only one who's bearish on Bitcoin. He's calling for 10K. Obviously, not tomorrow. It'll take probably a year or so to get down there. In this series, we're tracking his case, and it's basically valid until we make new highs. So we've added some new charts. We're just what he's doing here is the contrarian strategy here. So let's flip to that definition. Then let's take a look at the charts. Is a contrarian. A contrarian investing is an investment style in which investors purposefully go against prevailing market trends by selling when others are buying and buying when investors are selling. And a whole lot of people are buying right now. So it's going to be interesting to see if his philosophy or his perspective, his trading style, he did call the previous tops. We'll see if he's right. There is a lot of buying going on right now. We are at getting close to back to all-time highs. So we'll see. But, regardless of what people say, you need to know how to read the charts. Okay, and that's what we're going to look at. If you look at our previous videos, we just looked at specific resistance areas, right? If you look at all of my short selling and gap trading videos, which are on my YouTube playlist, we talk about this strategy. We use it for day trading. Works like a charm, okay? So take a look at my mRNA videos, my AMC videos, and you will see what we're talking about there if you're looking to day trade. Now, we identified this level, which is around 50,000. We'll just call it 50,000. We also identified another level at 57,500, and then finally at 64,000. These are the levels that we need to watch out for. We obviously came to this level, right? We poked our head out, boop, and we pulled back. Perfect market normal. This is normal behavior. The first run up to a resistance, 80% of the time there's a pullback. 80-20 rule. Look that up. 80-20 rule. So let's actually do this right now since we're this is a very good is it 80-20? 80-20 rule. Let's see if we can pull up a definition. Investopedia. The 80-20 rule is a aphorism which asserts that 80% of outcomes result from 20% of all causes for any given event. In business, a goal of the 80-20 rule is to identify inputs that are potential the most productive and make them the priority. For instance, once a manager identifies factors that are critical to their company's success, they should give those factors the most focus. So what we've identified here is that 80% of the time when the price gets to resistance, it retraces, it pulls back, right? That's the 80-20 rule. 20% of the time, it'll just blow right through it. And well, the odds are in your favor. So, when you're day trading, you do want to take that risk because the odds are in your favor. Is this bearish? No, it's just a normal pullback. We're just down. It's just a normal candle. It's not a breakdown or breakup candle. So I do want to add one line here, though. I'm just going to make this chart a little bit more complicated. So this is the only one that I'm watching right now. So this trend line cuts through there. And I think this is going to be important. We really want to hold this if we want this bull trend to stay in effect. So we really want to just trade in this upper range here. And we can just stay here until October, even into November, and then finally break out. That would be very good. That would be bullish in my perspective. If we're very bullish, we'll break out of there sooner. The bearish case is, we come down here and then we start trading and we start hanging out on this line here, and then we fall through. There's a retest and then a continuation. That will signal that Richard's bear case is most likely to happen, right? But for me, I'm bull and I'm going to stay bull personally as long as we stay above this line. That's why you can listen to people's opinions, but if you know how to read charts, you should really just stick to the chart. One thing I did notice, and this is a bull case, that I don't like head and shoulders all that often, but you can say this is the shoulder, head, and then the right shoulder. And then you had a false breakout, right? A bull trap, or I should say a bear trap. Sorry, this would be a bear trap. And this could be literally what we needed for it to, launch us higher. And if you ask most people, and I think Bitcoin will hit 100,000, and then that's from there. We might hit it into sometime in December, right? So I think my first scenario, this is I would like to see this the most. I would like to see it get stuck here, probably up like literally till October. Let's keep going here till the mid of October, almost until November, right? And then on the last from November to December, right? We just take off and we test, and then this is where I think the cycle ends. Just like in the stock market, you have the rally, the end of year rally, the Santa Claus rally, and then after we just sell off. So let's take a look. I know there's some interesting patterns here. I want to put in 2013, right? So this is the scenario that we're in now, right? We need to stay above, and you can see here, look, all the way up until mid-October. So I think we're going to stay sideways until mid-October, and then we'll have the breakout until the end of the year, right? And then and that's when you had the top here, and then we sold off for till 2015, and then we went sideways until 2016, and then we resumed. That's my personal opinion. That's if we could stay above the moving average. So that's what happened, in the bull run of 2013. In the bull run of 2014, it looks a little different than today. That it seemed a lot stronger. 2017. This seemed a lot stronger because we just went straight up until we hit the top here in December 18th, right? So that's all I wanted to show you. Keep an eye on this. We definitely need to stay above the moving averages. That is a point for the bull. 2 points for the bull. We stay above this trend line here that I drew. You can draw that yourself. That's another point. If we could stay there until October, that's another point for the bull. And all those, and then there's a 3-pointer for the bear. If we go back to the daily chart here, it's a 3-pointer for the bear if we end up closing and then retesting. So if we have an A, B, C pattern like this, I would say 3 points for the bear, or 4 points, a 4-pointer for the bear, and then the Richard Hart bear case is in full effect. Thank you for watching. Subscribe, like, all that stuff. Leave a comment below. I always respond to them. You can join me on Patreon if you want educational content on day trading. I'm more than happy to help you. Thank you for watching. See you tomorrow.